I want to tell you about the moment I realized I had no idea what I was doing, not as a student figuring out a new country, as someone who had just finished 2 finance degrees. I was holding my first Sydney payslip, and I was looking at the take-home number. After tax, Medicare, and super had been deducted. What was left was significantly less than I had expected. I had studied financial markets, investment theory, and accounting standards, and I genuinely did not understand what had happened to my money. This channel is what I built because of that moment. Welcome to Paycheck Decoded. Before we get into it, let me tell you exactly who I am and why that matters for this channel. I came to Sydney as an international student, tight budget, finance degree from home, and zero familiarity with how Australia's financial system worked in practice. I now work in Big Four audit in Sydney. Before that, investment banking. I hold a bachelor's and a master's degree in finance and accounting, and I actively invest across Australian ETFs, US and global markets, emerging economies, and individual stocks. I've helped a number of people set up their own investment systems from scratch. The gap between where I started, a student with almost nothing, and where I am now is entirely bridgeable. This channel is the bridge. When I arrived in Sydney, I had a plan. I had my university acceptance, a place to stay, and enough money to last a few months. The first financial reality check was the grocery store. Back home, I had a rough sense of what things cost. In Sydney, those reference points were useless, but the real shock came when I received my first paycheck from part-time work. I had calculated what I expected. Hours worked, agreed hourly rate, simple multiplication. What appeared in my account was noticeably less. PAYG withholding, Medicare levy, super contribution. 3 lines I understood conceptually from textbooks, but had never personally confronted. Here is what I didn't know then. Those 3 lines are not just deductions. They are levers. Every one of them can be influenced, optimized, or strategically used once you understand how they work. If you have ever felt that gap between what you expected and what arrived, this channel is for you. Here is the question this entire channel is built around. Once Sydney has taken its share, tax, rent, transport, food, everything, what is left and what should you do with it? Because the answer is not nothing. The answer is enough if you have a system. Let me give you the 3 things I got wrong when I first arrived, and what I know now that changed everything. The first, I didn't understand what superannuation actually was in practice. I knew the definition: employer contributes a percentage of your salary into a fund. What I didn't understand was that the fund matters enormously. The investment option inside that fund matters, and the fee that fund charges, even a difference of 0.5% annually, compounds into a very significant number over a 30-year career. Most people are in a default super fund they have never looked at. That is the first thing to fix, and it takes about 20 minutes. The second thing I got wrong: I didn't know which tax deductions I were entitled to. Australia's tax system has a self-assessment structure. The ATO expects you to know what you can claim. They are not going to remind you work-related expenses, self-education costs, investment-related deductions. If you have a portfolio, there are legitimate deductions associated with managing it that most retail investors never claim. That is money you are leaving with the ATO that belongs to you. The third thing, I was keeping money in a transaction account doing absolutely nothing. Not a high-interest savings account, not invested, just sitting there, being silently eroded by inflation. The fixed deposit mindset, keep money safe, keep it liquid, does not serve you in a high inflation environment. These 3 things, super, tax deductions, and idle money, are where most Sydney salaries quietly leak. Now, here is the framework. 3 layers in order. Layer 1, know what you actually earn, not your gross salary, not your package. The number that arrives in your bank account after all deductions. That is your real starting point. Your super contribution, for example, you can increase it voluntarily through salary sacrifice. This reduces your taxable income and simultaneously accelerates your retirement balance. 1 move, 2 benefits, completely underused. Layer 2, assign every dollar before Sydney spends it for you. Sydney is structurally designed to consume your money. My investment allocation leaves my account on payday, automated, transferred. Gone to my investment account before I have any opportunity to spend it, not at the end of the month, not when there is something left over, on payday. First, layer 3, make what is left work harder than you do. Your emergency fund, 3 to 6 months of essential expenses in a high-interest savings account. Everything beyond your emergency fund, invested, consistently, systematically, automatically. I started with 1 ETF and $100 a month. And that is exactly where the next video on this channel begins. The shock of how little is left after tax on your first Sydney paycheck. I felt exactly that. With 2 finance degrees and a background in investment banking, it is not a sign that you are bad with money. It is a sign that nobody explained the system to you. This channel explains the system. Every video is specific to Australia, to Sydney, to the actual numbers and strategies that work here. Subscribe to Paycheck Decoded. And watch the next video. It takes that $90,000 Sydney salary and tracks every single dollar after tax, after rent, after everything, and then shows you exactly what to do with what is left. That video's next. I will see you there.